Welcome back to Factful Finance, where we break down the money game with clarity, authority, and actionable tips. Let me ask you, how confident are you in your portfolio? If you're like most people, you probably think it's on track. But what if I told you that over 70% of investors aren't truly diversifying their portfolios? That's right, they're leaving themselves exposed to risks they don't even realize. And when the market hits a rough patch, it's too late to rethink strategy. But here's the good news. You can fix this. Let's dive into how to diversify your portfolio and reduce risk. Part 37 of our financial literacy series. Before we go any further, a quick reminder. This content is for educational purposes only. Mentioning any apps, products, or services is not an endorsement. Always consult a certified financial professional for personalized guidance. Now, what does it really mean to diversify your portfolio? Simply put, it's the practice of spreading your investments across different asset classes to reduce the impact of any single asset's poor performance. This isn't just a nice-to-have strategy. It's a core principle that can protect your wealth through market ups and downs. But how do we do it right? Let's break it down step by step. First, spread across asset classes. Stocks, bonds, real estate, commodities. The more types of assets in your portfolio, the better. Each asset class reacts differently to economic changes. For example, when stock prices fall, bonds may rise, cushioning the blow. Take Sarah, for example. Sarah had her entire retirement fund invested in tech stocks. When the tech sector took a hit last year, she saw her account value plummet. But once she diversified by adding bonds and some international stocks, her portfolio performed better, even during turbulent times. Second, geographic diversification is key. You don't want to be overly reliant on one country's economy. Let's say you have a US-heavy portfolio, but what happens if a recession hits here? This is where global exposure comes in. By investing in international markets like Europe or Asia, you can buffer against local economic downturns. Take Noah's story. Noah invested heavily in the US market, but when the country entered a slow growth period, he struggled. After he added exposure to emerging markets like India and Brazil, his portfolio bounced back. Countries grow at different paces, and one nation's slump can be another's boom. Next, sector diversification. We all know that tech is booming, but don't put all your eggs in one basket. If you're heavy in technology, consider balancing with sectors like healthcare, consumer goods, or energy. These can behave differently under various economic conditions. So, if tech takes a downturn, other sectors might pick up the slack. Here's a good example. Olivia invested in both renewable energy and health tech. When the energy sector took a hit, her health tech investment soared. A well-rounded portfolio lets you weather market fluctuations with less stress. Finally, risk management is where the rubber hits the road. A common mistake investors make is thinking they can tolerate more risk than they actually can. Diversification reduces risk, but you still need to assess your personal risk tolerance. How would you feel if your portfolio lost 20% in a year? Make sure your risk aligns with your financial goals. For example, Henry was always excited about high-risk stocks. He jumped into some volatile startups, and while he saw a few big wins, he also experienced steep losses. After reassessing, he shifted to more stable investments like large-cap stocks and bonds to reduce the impact of any future downturns. Diversifying isn't about avoiding risk entirely. It's about managing it effectively. And when you get it right, you position yourself for long-term success. Want to know the best part? You don't need to be an expert to start diversifying. It all comes down to small, consistent steps, like adjusting your portfolio annually or seeking out professional advice to ensure your strategy still aligns with your evolving financial goals. What's your biggest struggle with investing or diversifying? Drop a comment. I respond to as many as I can, and I'd love to hear how you're applying these strategies. If you found this video helpful, you'll love the next one. Click the video on screen to continue building your financial expertise.